Rather than investing in physical rental properties and having to deal with tenants and doing repairs and managing all those things that come with owning a property, there's a lot simpler of a way to invest in real estate that doesn't require near as much stress or work, and that's through real estate investment trusts, or REITs. So let's talk about some of the best REITs to invest in this year and to consider adding to your portfolio. The first one, and probably one of my favorite REITs, is Realty Income, or ticker symbol O. And the reason why Realty Income is one of my favorites is because it pays a monthly dividend. In fact, it's literally called the monthly dividend company, and its dividend yield is currently at about 4.6%. Realty Income owns over 12,000 commercial real estate properties, mostly in the US, and the cash flow generated from these properties supports the monthly dividend, as well as other growth initiatives. Realty Income is considered a dividend aristocrat because it's been paying a consistent dividend since 1994 and has paid over 632 consecutive dividend payouts. And as of today, Realty Income's current share price is right around $65 per share, with a market cap of about $43 billion. It also has a compound annual growth rate of 14.6% since 1994, with a dividend growth rate of about 4.4%. So if you were to invest in Realty Income today, you'd be paid 25 cents per share each month, meaning if you were to invest $10,000, you'd get paid roughly $40 in dividends every single month. And that's of course not including the capital gains returns that you might get if you hold long term. So again, Realty Income is one of my favorite REITs to invest in for consistent monthly dividend income. The next one is Prologis, or PLD. So Prologis is a logistics real estate company located in San Francisco, and it's recently been getting a lot of attention and gaining in popularity among investors since it just increased its dividend and has consistently been beating earnings as well. Prologis plays a huge role in the global supply chain industry and currently owns somewhere in the ballpark of 900 million square feet of e-commerce warehouse space. So it's basically the landlord for huge customers like Amazon and FedEx, and the company in general has seen massive growth that's been sustainable as well for the past few years now. PLD has a current price of around $122 and a dividend yield of just under 3%. In fact, it actually just announced a dividend of 87 cents per share, which is a 10% increase from the previous quarter. So Prologis has been a very attractive REIT to invest in, and it might be something to consider adding to your portfolio this year. Number 3 is American Tower, or AMT. So this is kind of a unique company that owns the real estate for cell towers and then leases them out to some of the big name telecom companies like AT&T, Verizon, and T-Mobile. AMT's dividends have increased 20% annually since 2012, and that growth should continue year over year as well. It has a large geographically diverse portfolio consisting of more than 223,000 cell tower sites across 6 different continents. American Tower has a market cap of around $90 billion and pays a nice 3.2% annual dividend. Its share price just recently dropped to $195, which isn't too expensive to own a few shares in your portfolio. Coming in at number 4, and another one of my favorites, is STAG Industrial. Very similar to Realty Income, STAG pays a monthly dividend, so you can always count on getting a nice dividend paycheck more frequently than every quarter. So STAG is an industrial warehouse REIT that's been benefiting a lot from the e-commerce space. It owns around 600 warehouse properties with over 100 million square feet of leasing space across the US. So just like Prologis, one of STAG's largest tenants is Amazon and has other big name public companies leasing from them as well. STAG has had a reliable cash flow with a lot of growth opportunities for the future as well. Its current share price is at $34 per share with a market cap of $6.2 billion and a nice annual dividend of 4.2%, and that dividend has been consistently paid out every single month for the past decade, so for the most part it is very sustainable. With its cheap share price and consistent dividend, STAG Industrial is another REIT that will help add more cash flow to your portfolio. The last one at number 5 is Extra Space Storage, or EXR. So EXR is the second largest self-storage REIT, so it's basically just a storage unit company, and it's second behind Public Storage, or PSA. And there's nothing wrong at all with Public Storage. In fact, I think it's another awesome REIT to invest in. But I simply like EXR a little bit better, and maybe I'm a little biased because it is located here in Salt Lake City, Utah, where I'm from. But I like it a little bit better because when it comes to the share price, EXR's growth has been a lot more significant than PSA. They both pay a 4% dividend, but again, EXR does grow at a more significant rate each year, so it really depends on which REIT you'd rather have in your portfolio. Or you could just own both if you want. EXR has a market cap of $22.5 billion, a PE ratio of 25, and like I mentioned before, it pays a 4% dividend, and it's been consistent with dividend payouts for well over a decade now. Also, EXR just announced a cash dividend of $1.62 per share with an ex-dividend date of March 14th, 2023. So if you're watching this video before that day, you should be able to capture that upcoming dividend. Hope this video was helpful, guys. As always, feel free to leave a like and a comment, and I will catch you next time. See ya.